In this video, I'm going to answer a question I get asked a lot. Can you change jobs while you're buying a home? There is so much bad information out there on this topic. Google the question and you'll find articles and Reddit threads saying you need to keep the same job for 2 years to get a loan. And that is wrong, flat out wrong. The truth is, under the right circumstances, it's possible to buy a home using income from a job you haven't even started yet. So keep watching and I'll bust some of those myths and explain how to change jobs without messing up your house hunt. And if you stick around to the end, I'll summarize everything and give you a checklist that you can use to make sure that your new job checks all the right boxes to qualify you for the mortgage that you want. Now, if you're new to my channel, thanks so much for stopping by. I am Julee Felsman, and I've been a mortgage lender for 30 years. And if you've been here before and watched some of my other videos, I guess welcome back. I hope you enjoyed this one. If so, please like and subscribe and turn on alerts and comment below. And anytime you have questions about your own situation or you need help with a mortgage, I would welcome a connection. Feel free to call or text or email. My contact information is in the caption below, and I do lend in all 50 states. So, like so many false rumors, the idea that you need to have a job for 2 years before you can get a mortgage does have a basis in reality. Lenders like to see that you have at least 2 years of experience in your line of work. But that experience doesn't have to be in the same job. In fact, it's kind of one of the most loosey-goosey lending rules that we have, if we're just not that picky about what counts as experience. If you have any kind of work history that ties to a new job, even super loosely, you're fine. If you went to school for something related to your work, you're going to be fine. I've even had clients use volunteer work to demonstrate that they have experience in their field. And whatever you're using, this school or volunteer work or other work history doesn't even have to be recent. If you were an art major 10 years ago and you've worked retail and office jobs since then and you just got a job as a graphic designer, that's going to be totally fine. So don't worry about this part of things. If there was something on your resume that convinced your new employer that you were going to be able to do the job they hired you to do, you probably have this work experience requirement for your mortgage covered too. But that isn't to say that there aren't other things that we have to think about. When a lender qualifies you for a loan, we want to know some key elements about your income, that it's likely to continue, that it's stable, and for a brand new job, we need to know about the timing. We want to know when you're going to start. And none of this is probably going to be very shocking for you to hear. Of course, a lender wants to see that you've got sufficient income to pay your loan payment month in and month out, starting when you close, and then for years to come. Now, to a lender, a job or any other source of income that you have is not considered likely to continue unless we see no evidence that it's going to end within 3 years of your home purchase. So as soon as you give notice to your current employer that you're leaving, or you sign a contract to start a new job, we can't use that old job to qualify you for a loan anymore. It's ending, which means it doesn't have that required 3 years of continuance. And this is going to be true even if you're staying in your old job past your closing date. From a hassle factor standpoint, I know it may feel easier to keep a job change to yourself, but no matter how tempted you are, don't do this. Right before closing, lenders verify employment. If we learn you've given notice, then your loan is at the very least going to be delayed while you and your lender scramble to document your new job. But at worst, if your new job doesn't check all the right boxes, your loan could fall apart at the very last second and you could lose your home. Not to mention, closing a loan under false pretenses is just illegal. So keep your lender in the loop. We want to know what's going on. We will work with you and make things go as smoothly as we possibly can. We can't help you navigate things that we don't know about. We also want to document to see that your job has stability. And this is actually a really important concept to understand when it comes to a job change. Lenders classify sources of income as stable or variable. And if a source of income is variable, before it can be used for loan qualifying, we have to average it over time. Time is kind of this alchemy that turns variable sources of income into something that lenders see as stable and trustworthy and ongoing, something that's going to be there as a source of income to pay your loan. And the gold standard for any sort of variable income is to average it over 2 years. But the minimum period of time is a year. And this is how this comes into play with a new job. It makes income from new employment this binary thing. If income is stable, then you're good to go. But if new income is variable, it is invisible for loan qualifying purposes and can't be used for at least a year. You might be making great money in the real world that is worth $0 on your loan application. Now, some sources of income are inherently stable. If the job you're switching to pays a salary, well, that's going to be super easy. But anything other than a straightforward, straight up salary requires a little extra attention to detail. A new job that pays you an hourly wage and has a set minimum number of hours should also work for loan qualifying. But I really, and I can't emphasize this enough, highly recommend that you always work, without exception, the full number of hours you're scheduled to work. We're going to ask you, when you apply for a loan, for your most recent month of pay stubs. And then we're going to look at the year-to-date income on your pay stubs and calculate an average monthly income since you started. And if that average of what you've actually been paid doesn't line up with what we'd expect to see, what we can calculate you should have been paid based on your hourly rate and the hours that you're supposed to be working, then an underwriter could flag your income as variable. An income that gets labeled with the scarlet V can't be used for at least a year. So don't knock off early and don't take time off until you have paid days. I have in the past successfully battled through this issue for a few clients. One who comes to mind started a new job and then almost immediately had a family health emergency that pulled him away, and he had to take some time off before he had accrued any days of paid time off. That was a very one-time unusual event, and we could document it. We could get his FMLA paperwork and show that, yeah, he had some time off before he had time that was going to be paid. If you're a nurse, it's also pretty common in some other positions to have a bit of a weird schedule, an unusual schedule that isn't tied to your normal hours for maybe the first few weeks of a new job while you're going through training. And so if you can get your HR to help us document this, and then again, very importantly, once training's done, your hours since training have wrapped up are like clockwork, then we can be okay as well. But as a rule, just do everything you can to keep your actual hours worked in line with your scheduled hours. This will make your life so much easier. Now, of course, there are certain types of income that are just inherently variable, and they're going to be a little more challenging to use when you're switching jobs. Commission, bonus, overtime, restricted stock units, freelance income, any type of self-employment income. Of course, these are all going to fall into this category. So if your old job paid commission, bonus, or overtime, and you've started a new job that has a similar pay structure, it might be possible to include those variable parts of your pay when qualifying you for a loan. But your lender's going to want to average a 2-year history from your old job, and then your pay stubs from your new job and your employer are both going to need to confirm that your new job is paying an amount that's similar or equal to what you've earned in the past for those variable elements, bonus, overtime, commission, whatever it is. And those averages have to be like for like. If you got commission at your old job and your new job pays a bonus, that is not going to do the trick, even if the amounts are identical from the old to the new job. Now, if you work in tech, income from RSUs can be really tricky. Most loan programs only allow RSUs as loan qualifying income if you have a 2-year history with your current employer. But I do have some good news. My company understands how important RSUs are as a source of compensation to those who receive them. So we've created a program that'll let you buy a new home using RSU income. You just need to show a history of RSUs from your old employer and get that first grant from your new employer. Now, if you change from a salaried position to freelance, your income is going to be considered variable and it won't count for at least a year. Switching jobs from staff to a traveling RN job falls into this category, and I know how frustrating that is because you can make so much more money as a traveling RN or if you switch over to being a consultant, for example. But any type of freelance work is typically based on short-term gigs that don't meet that 3-year requirement. No one job that you get is going to have that 3 years of continuance as a freelancer. And then, of course, you have the potential for downtime between jobs. So lenders have to average your income over time, and that's a minimum of 1 year. Now, if you quit your job to work for yourself, I kind of have some bad news for you. Self-employment is, of course, a variable source of income, but as a self-employed person, you're also going to write off business expenses against whatever income it is you earn. And lenders need to see what that net income is going to be. So we need your income tax return so we can see your true loan qualifying income. Now, helping self-employed homebuyers successfully navigate the mortgage process is a real passion of mine. So for everything you need to know about how lenders are going to view your income, calculate self-employed income using tax returns and other things, check out my self-employed mortgage playlist. It's growing. I'll add to it periodically. I'll put a link to it in a couple of videos in the caption. I really, really love helping self-employed people navigate the mortgage process. So give me a ring if you have any questions about that. Next, I'm going to shift gears and talk about timing. But before I do that, let me remind you to stick around to the end, because after I talk about timing, I'm going to summarize everything that I've covered and give you a quick checklist that you can use to make sure your new job will work for loan qualifying purposes. So back to timing. If you've already started your new job and you'll have pay stubs before you want to close on the purchase of a home, I've kind of already talked about everything you need to know. So long as your income checks all the boxes that I've already covered and it's supported by your pay stubs, you're going to be good to go. But what if you've not started your new job yet? So long as we can check a few boxes, you may still be good to go. It's possible to buy a home using income documented with a job offer letter or a contract and no pay stubs, which is nice, right? Because moving and starting a new job is stressful enough without trying to do everything all at the same time. And moving once is bad enough, so you definitely don't want to get stuck moving twice. And buying and settling into your new home before work can really, really be a sanity saver. But the devil is very much in the details, so let's talk about these details. Your offer letter needs to clearly show your name, your employer, what your new position will be, simple stuff. Of course, it also needs to say what your starting date is and how much you'll be paid and what type of compensation you'll be receiving. And if you're going to be paid hourly, the letter has to state the hours that you're scheduled to work. And the letter or contract has to be fully executed with your signature and your employer's signature as well. Now, if you're using a conventional loan to buy your home, you can close up to 90 days before you start work or up to 60 days before you start work with an FHA or a USDA loan. VA loan rules are characteristically kind of vague on a lot of things, and this is one of many places where that's true. They don't include a specific timeline, but I always think 90 days is a good general rule of thumb. Now, conventional loans only allow you to close using a job offer letter if you're buying a single-family home that's going to be your primary residence. Multifamily properties, if you want a house hack in a duplex or a triplex or a fourplex, if you want to buy a secondary residence, a second home, vacation property, or if you want to buy a rental, those are not allowed. You have to actually start your job. You can't use a job offer letter to make a purchase of that type. And in addition to the money that you need to cover your down payment and your other purchase costs, lenders have to show that you can make ends meet between the closing date on your home purchase and receiving your first paycheck from your new job. And this can be from a combination of income you're going to receive from your old job, if maybe you haven't left it and that's still going to be coming in for a little while, or money that you have left over in savings after closing, what lenders call reserves. The exact amount that you need to cover that gap depends on your financial situation and the loan you've applied for, but it isn't generally going to be more than about 6 months of your new mortgage payment. And finally, by the time you close, your job offer, and this is important, has to be non-contingent. The vast majority of job offer letters that I see include some kind of pre-employment criteria or stipulation or things that have to be cleared. The most common is going to be a background check, maybe drug screening, maybe licensing or credentialing, whatever it is, that has to be cleared ahead of closing. Now, these rules are pretty straightforward, but I want to call out a few places where historically I've just learned we can run into some issues. So one is if your starting date is a few months away, your new employer may not feel the same sense of urgency around processing a background check or drug screening or clearing any of those other pre-hire contingencies as you do. So ask your HR to please tackle those chores as soon as possible so they don't delay your house hunt. If you've accepted a job working for a federal agency, at first you're going to get a tentative job offer letter, and it looks really official and it has all the basic information that we want to know, but we can't use it for a loan. It's tentative. We need the final letter that you're not going to get until your background screening is done. And the screening, for some reason with the federal agencies, can take a really long time. One recent client was still waiting for her background check on the day her job was actually supposed to start, and she wound up having to ask her parents to co-sign on her mortgage so that her home purchase wasn't delayed. Now, if you're in a medical, a legal, or financial field, financial professional, if you're a teacher or you work in some other field that requires a license, your offer letter will probably include proof that you have your license or maybe that you've passed the state bar or something along that line. So make sure you get clear about the time that it's going to take to process whatever your licensing application is or hear back on whatever the test results are, because those timelines are probably going to determine how soon you can get out there shopping for a home. And this one doesn't come up often, but you can't use a job offer letter from a family member or a party with an interest in the transaction. If you're buying from the seller, a real estate broker, your lender, a builder, something like that. So if you're going to go to work for a family member or someone who's involved in the transaction for the home that you're purchasing, you've got to start work before you can use your income for loan qualifying. You can't use a job offer letter to qualify. And last but not least, there are some really practical timing considerations. Changing jobs while you are in contract actively working on purchasing a home isn't ideal. And I mean, once you have an offer accepted, swapping income and employment information while we're processing and underwriting your loan is a little like trying to fly a plane while we're building it at the same time. And at best, it's going to make for a messier process. But there's also a chance your closing could be delayed. And of course, if your closing is delayed and your seller doesn't agree to extend closing, you could even lose your home. So it's really best to stick with your current employer from the day you go into contract on a home purchase until after you have keys in your pocket. Status quo is definitely your friend while you're actively in the loan process. Now, I did promise that I would wrap up with a checklist that kind of summarizes everything that you can use to make sure any new job you're thinking about is going to check all the right boxes and not mess up your home purchase. So here goes. First, we're going to talk about income eligibility. So here are some questions to think about. Are you going to be paid on a 1099 or a W-2? If your new job pays you on a 1099, you're self-employed and your job isn't going to count for a loan until a lender can see your income on tax returns. Are you going to work for a business and have 25% ownership in that business or more? If so, lenders are going to consider you self-employed. If you own 25% or more of a business you're working for, you're self-employed. And again, we're going to need income tax returns. If you don't have any other income that you can use for loan qualifying purposes, your home purchase will probably be delayed for at least a year. Are you salaried? If so, hooray. Salaried income is super easy peasy. Are you hourly? If so, do you have a set or minimum number of hours you're scheduled to work? If your hours are variable, if you're maybe on call or freelance, your income is only going to come online for loan qualifying purposes after 1 year on the job. Does your job have an ending date? Any job that your lender knows will end inside of 3 years might not be able to be used toward loan qualifying purposes unless you can show that the position is guaranteed or highly likely to be renewed on an open-ended basis. So a standard one-year teaching contract, for example, that's expected to renew year after year can be just fine. But if you're just filling in for someone who's taken a year off, maybe they're on family leave to have a baby, and they're going to come back and your position ends, that would be a problem. Now, are you going to start work before you close? If so, make sure, and this is just so important, make sure you never work less than the minimum number of hours you're supposed to work. If your average gross monthly income is lower than we'd expect to see based on your scheduled hours, your income could be flagged as variable, and then it might not count for a year. So do everything you can to keep your actual income in alignment with whatever those scheduled hours are supposed to be on your job offer letter. And if you want to buy before starting a new job, using a job offer letter or a contract, here are some additional considerations. Are you buying a single family home that'll be your primary residence? For a conventional loan, multifamily, second home, and rental purchases are not allowed. Does your offer letter or your contract clearly show your name, your new job title, and your employer's name? Is your offer letter or contract fully executed? Both you and your employer need to sign off on that offer letter. Is your employer a family member or an interested party to the transaction? If you're going to go to work for a family member or for the seller of the home you want to buy, or your real estate broker or your lender, you can't close using just a job offer letter. Does your letter show the amount and type of pay you'll be receiving? And if you're going to be paid hourly, are your scheduled hours spelled out? Does the letter show your starting date? Remember, you can't close earlier than 90 days before your job starts for a conventional loan, 60 days before your job starts for an FHA or USDA loan, and VA loans are a little vague. It's a lender's judgment call, but again, 90 days is a good rule of thumb for that as well. Does your letter include any pre-employment contingencies? If your letter says you have to pass a drug test, a background check, credentials have to be provided, you have to show a license, or there are any other stipulations before you can start work, your employer has to confirm in writing that all conditions have been satisfied at least a week before your closing date. So you want to get clear on the process and the timeline for these things so you don't start shopping or write an offer too soon and wind up in a stressful jam. And do you have sufficient cash reserves? You'll need to show enough income or savings, or a combination of the two, to make ends meet between closing on your home purchase and your first paycheck from your new job. Your lender can help you figure out how much you need and what assets or income you can show to cover this base. Now, I really hope you found this video helpful and informative. Comment below, let me know, and please take a second to like and subscribe and turn on alerts. And if you're in the market for a lender, look no further. I'd love to connect. Call, email, text anytime. My contact information is in the caption. Thanks so much for watching, and I hope to see you in the next video.